Hello, lovelies. It's your girl, Amor Galore. Welcome back to my channel. In today's video, we're going to talk a little bit about how to up our credit scores. So I've definitely learned a lot in my adulthood life about credit and credit cards and how to use them responsibly, even though I didn't start out that way. And so I'm just going to share with you today some of the things that have helped me build my credit. So if you want to know what tips and tricks I use to help boost my credit, keep watching. All right, so I am going to start off today by saying or giving you a disclaimer. I am not a credit guru. I do not work in the credit industry. I don't know every single bit and piece to credit. However, I do know the things that have worked for me and have unfolded to be a good thing. So I'm just going to share with you guys today some of the things that I have used and some ways that have helped me out. So hopefully they can help you too. So in the beginning, when I started my whole credit journey, I wasn't approved for anything because I had no credit. So one of the first things you want to do in building good credit and stepping away from that bad credit is to build your credit. So one way to build your credit is the way I did it. I went to my local credit union that I was banking with and asked for a line of credit. Now, if you don't know what a line of credit is, it's essentially some money that they lend you and you have your bank account with them, so they're gonna automatically take it out every paycheck. I think it was every paycheck, or maybe it was monthly. I'd have to check into that, but regardless, either way, they're gonna be taking the money directly out of your account. I know that some banks are pretty finicky and kind of stingy when it comes to helping people out and lending lines of credit. So it's really up to your discretion what bank company that you decide to use. But I used the credit union at the time. And so over time, I believe it was like, I think it was $100 was the line of credit, and they took out $10 monthly. So I believe it was like a 10-month thing. And so and then I actually did it again too, so that I can continue building my credit. And I think the next time it was a $200 limit. And then I ended up paying $20 a month for that one, I believe. That was another 10-month process that my credit could see that, hey, she's been diligently paying these payments every month, so I am more credit worthy that way. Now, another thing you can do, and you have to be very careful with this, and you have to have a lot of trust with the person, is to sign up to be an authorized user on their account. So what that means is that somebody you know has really good credit and has a credit card, they can put you as an authorized user on their credit card account. So that way you can kind of reap the benefits of their good credit, and it'll make you look like you're more credit worthy too. It's basically like a co-signer is what I can relate it to. So again, you really want to make sure that you trust that person, because if they decide not to pay and they just completely forget all about their credit card and just puts it to the wayside, that's gonna fall back on you too. So that's really why one, you want to make sure you trust the person, and two, you want to know that they are making good payment history and stuff like that. Which I don't know if I would even want to put myself in that position, because it's really up to the other person how well you do. I like to have my own control over my own destiny, essentially. It's like I am making the choice to make my payments on time, and I have control over that, but you don't have control over the other person. However, that is an option you can use if you're trying to build your credit or start up with good credit. So another tip to all of you out there is to pay your bills on time. Now, I know that's super obvious and like, duh, I get it, you know, but that is how you become more credit worthy. And really, people who are looking at your credit are looking at your credit to see, you know, X, Y, and Z to make sure that you meet their minimum requirements, because they're looking at the risk factor with you. So if you are higher risk, that is a lower chance that you're going to get in, you know, buying a car, buying a house, you know, whatever you're wanting to use your credit for. And another thing with paying bills on time, like if you can't pay your bills on time, I suggest calling the company and say, hey, you know, I need a couple weeks. A lot of companies do have grace periods, but I feel like with more communication, they're going to know that they're going to get their payment. So they're trusting you more versus you just kind of letting it go by the wayside and then letting months kind of skip on by without paying anything, because then they're going to look at you like you made this agreement and you're not upholding that. So definitely have that communication with your companies that you're financed through or whatever like that, because a lot of them do want to help. No, there can be some sharks out there for sure, but again, that open line of communication I think has been beneficial for me. Even when I've had to pay bills late, I'm like, hey, I got into a funk, I wasn't prepared for it. What can we do? And they were happy to work with me. So another thing that you can do that I found out recently is Experian Boost. Now, what Experian Boost is, essentially, it goes back to you paying those bills on time as far as your utility and your phone bill and stuff like that. It takes those payments into account into your credit so you can get a boost. I believe when I did my credit boost back in, I think it was August, it upped me 7 or 10 points, which was just what I needed to do what I was trying to do at the time. So definitely lean onto that, because you want to get credit for your payments that are on time. So why not do that? I know I had talked with one of the prominent companies, phone companies. I talked to one of their employees and asked, does this phone company report to the credit bureaus that I'm paying on time? And they told me, no, they don't. Basically, they will only post something, or basically they'll only send something to the credit bureaus if it's negative, which, okay, cool. But that's why I did Experian Boost, because I did want to get credit for making sure that I pay my bills on time, and I had been. So it was just the boost that I needed in my credit to help me do what I was trying to do. So another thing that I have used, I have shied away from it a little bit because of the situation that I'm in. I'm trying to get myself out of debt, but credit cards. So credit cards, right? Credit cards will only work for you if you know how to use them. That is a big misconception with credit cards. A lot of people think, oh, I can just put it on credit, can charge it up, and it'll be fine. However, your credit utilization is way up, and that interest is eating away at your life. So you've got to keep those types of things in mind too. Credit cards can actually boost your credit. So if you keep your credit utilization ratio under 20%, that looks really good on your credit. So it's showing the companies that you're able to keep your balances low, and you're able to make those on-time payments. So it basically shows that you are responsible with your money, essentially. Now with credit cards, that is revolving debt. And so what revolving debt is that you can just reuse it and reuse it and reuse it and reuse it. With that credit line that I talked about with the credit bureau a little bit before, that was an open-ended. So they opened the account, they gave me $200, and once I paid that $200 off, it was closed. It wasn't a reoccurring debt. So with revolving debt, that can be a good thing and it can be a bad thing, especially if your credit utilization ratio is high. So I don't think I explained what the credit utilization ratio is, but so basically what that is it's the card balance divided by the card limit. So say I have a $100 credit limit on a credit card, and I've spent $10 of that. So my credit utilization would be at 10%, because you take the $10 divided by $100, and that will give you that ratio number. Like I mentioned earlier, they want you to keep it below 20% because that's how you're using your cards effectively and making them work for you. If your utilization is high, essentially all that means is that you're just going to continue to pay down your card so you can get to that 20%. But that is one of the big things that creditors do look at when they are approving you for something, is that credit utilization ratio. So definitely want to make sure that's under 20%. I am working on that myself. Not perfect. I've made mistakes with credit cards. I'm not the greatest person with money, but as I am going through this journey in life and trying to make myself better and better every day, I still falter, but I'm still moving forward and trying to do those things that I know that's going to be best for me. And this is one of it. I want to get my finances order. I want to bite down on my debt, you know, so I've really been looking into this stuff to try to help me encourage myself to do better with my money. Another thing you want to take into consideration when getting a credit card is you want to look at the APR, or the annual percentage rate. So basically what that is it's pretty much just the interest rate that you're going to be charged. A lot of credit cards charge at like 22, 24%, which is really high. But I guess that's just is what it is. That's just what they do. And it might be dependent on your credit too. I'm not sure on that. Don't quote me. Again, not a credit guru. That's just what a thought that I had. But what you want to look at that APR, because that's how much money you're going to be paying back extra from what you borrowed. And some credit cards actually have a, what do they call it? It's like a deferment of interest. So they might say, oh, if you sign up with this card today, you won't be charged interest for the next 12 months. But that's pretty cool too. If you have a specific idea in mind of what you want to use your credit for, you could pay that back off in 12 months and not have to pay any interest or anything like that. So those are cool to look at. Another thing you want to look at when choosing a credit card is any monthly fees, yearly fees, anything like that. That's just extra money that you shouldn't have to pay, because there are some cards that don't do that. So go to a card that doesn't have any yearly fees or anything like that, monthly fees, so you don't have to worry about coming up off of that extra money. One thing that I have gotten into when choosing a credit card is if they have any cashback reward programs or anything like that. So I have this card that if I spend, it gives me money back, and if I pay it off, it also gives me money back. So I thought that was a really good idea to get that card, because yes, it's twos and fews, you know, but I've gotten $6, $7 one time for spending and using the card, which, I mean, that's $6 to $7. That can add up over time. So definitely you want to look at, if you are getting into a credit card, looking at all of these things, their fees, their rewards, all that good stuff. It's always good to know what you're getting into. But credit cards can be the devil. So I guess it's technically not credit cards. It's the way we spend them, you know. So just bear in mind that with a credit card, it's never your money. It's never your money. So you might spend it, but you're paying that back and some. So just bear in mind that you got to know how to use a credit card to make it work for you and not work for it. Last but not least, another tip that is going to help your credit is obviously paying off your debt. So I mentioned the credit utilization. If it's high when you're paying off your debt, that's going to make your credit a lot better, because they're saying, hey, you're using your credit better. Paying off debt, the less debt you have, the better. Pretty common knowledge. So you just keep chipping at that block and you guys are going to have great credit. I am working on it, and my credit has gone up probably 40 points in the last like 6 months or so, because I've just been working on chopping it down. And like I said, my end game is I want to be debt free completely. So that's my end game, and these are the steps that I'm using to get to that goal. So if you have that goal in mind, definitely start to chop down and see what you can do, see what you can change, see where you can save and throw money back on those cards or whatever you have, so that you can get all of that stuff down to a zero. I am going to do it, and you can too. So with that being said, you guys, I appreciate you joining me in my video today. As always, keep spreading that love, and I will see you guys in the next video. Peace.